silver, as we know, it tends to lag gold, and then once gold gets going, silver gets going, and then it moves a lot faster. And if if we do have some kind of recession first before the massive government spending comes in, as I said before, I mean, we need a recession or like a serious stock market correction before you're going to see that government spending happen.
Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and I want to get a precious metals update. I really feel like this is a critical time. Really, if, with precious metals, gold specifically, having this move higher, a really strong 2017, a strong start to 2017. And I want to get some analysis here. And I brought on the line Jordan Roy Byrne of thedailygold.com. And this guy's analysis has been all over the internet. He's covered by investing.com, Kitco, Barron's, mining.com. And he's got a brand new book out, the 2017 Gold and Silver Outlook. Jordan, thanks for coming on the line with me today.
Thanks so much for having me on, Kenneth.
Well, I want to remind everyone, you were one of the first to break down to us here at Crush the Street the effects of real negative interest rates and the environment and its impact on precious metals. And even with interest rates rising, we are seeing precious metals go higher, especially when we look rate hike to rate hike. But even with a strong start to 2017, you're talking about some downside risk here with gold and the precious metal sector. So let's get your analysis on this.
Yeah, well, it's interesting. One thing with real interest rates, I mean, it's so hard to predict kind of fundamental developments. And you'll hear people say, oh, well, the fundamentals are bullish. This doesn't make any sense. They said that about the bear market. And I did a video and there was a comment about that, about how the fundamentals are bullish or they haven't changed. Well, real interest rates are always changing because inflation's always changing and interest rates are always changing. And on the fundamental side, I mean, I always look to technicals first because they lead the fundamentals, as we know. But it's good to follow both to really match up what you think could be going on in the market. Because if you're just looking at charts and then you don't have any idea of what fundamentals are doing, then you can't really confirm your analysis. And looking at the charts, I mean, I see weakness in precious metals. I see areas for concern. And first, with respect to fundamentals, inflation has been rising, as you said, but oil may have put in some kind of an intermediate term top. And so a lot of smart market observers, they're saying that inflation might go down because of that. Now, inflation has been going up even if you take oil out, so it hasn't really been oil driven. But energy is a big part of inflation. And even if energy prices have peaked for the time being and they start to go down a little bit more, that will probably be negative for inflation, which means maybe inflation for the time being will stop rising. And at the same time, interest rates, I believe eventually they're going to go lower before they go a lot higher. But as far as where we are right now, the market still thinks that the Fed is going to hike a couple more times this year. And where we are right now, like looking at the 10-year yield, for example, I haven't checked it today, but it's been trading in this range from 2.3 to 2.6. And yesterday it got kind of close to 2.3%. It was at 2.35%. And if that were to break below 2.3, that would be really bullish for precious metals. And we know the stock market's correcting here, but looking at the internals of the stock market, breadth indicators like the advanced decline line, the percentage of stocks trading above the 50-day and 200-day moving average, all these indicators right now are showing a positive divergence during this little stock market correction. So with respect to gold, I'm worried that we could see the stock market shake off this correction, rise or be stable in the months ahead, and that would potentially reinforce the market's belief that the Fed is going to hike, and then we might see yields go up a little bit more. And then you contrast that with maybe the market thinking that inflation's peaked because of oil. So this is just over the next like 3 or 4 months or so. I'm not talking about the next 1 to 2 years. I'm just talking about the next quarter, maybe a little bit more than that. I'm a little concerned that we could see real interest rates go down. And looking at the charts as far as precious metals, we know that the miners lead the metals, and the miners, I mean, it was really the end of January or perhaps the first day of February when they hit the 200-day moving averages during this recovery. And I mean, they peaked in early to mid-February, and they haven't even come close to those peaks or the 200-day moving averages since then. And while that was happening, the metals were rising and they were getting up to the 200-day moving averages and making that first high in February. And of course, the metals, you look at gold. Gold has come very close to retesting its February high. Silver, although silver is trading above the 200-day moving average, it's kind of a misleading fact because silver is actually below its February high. Gold is much closer to its February high than silver. Then, of course, if you look at the miners, they're not even close to their February high. So that type of action is really negative in my view, because typically that's not what you see in a strong precious metals market. I mean, you see the stocks leading, or at least, I mean, close to leading or showing some strength. And the same could be said with looking at silver against gold. And as I said, you know, although if you look at the silver gold ratio, it's been rising, but if you just look at the charts, you can see that gold has basically, I mean, it's come within $1 or $2 of retesting its February high, whereas silver has not. I mean, silver might do it in the next couple days, but all of this action, and then just factor in, you have gold and the gold stocks, they're trading below the 200-day moving averages. I mean, they're above the 400-day, which I look at, but they're, other than silver, which is a little bit above its 200-day, the entire complex is trading below its 200-day moving average. And that just concerns me in the short term. I mean, unless gold and the gold stocks suddenly make a rally and get above the 200-day moving average, I don't foresee this being the start of a big move higher. I think that'll happen later in the year, maybe at the end of the year. And so, therefore, for the time being, I think the next big move, not the next huge move, but I guess we could say the next 15 or 20% move in the stocks is going to be down, not higher. And so I'm looking at possibly looking at the stocks retesting the December lows. Now, I know that's kind of scary because that's 20% or 25% lower in some cases, but I do believe that, you know, as you said, Ken, I mean, I do tend to be a contrarian. I tend to be a little cautious at times, but I do want to caution people that, I mean, that could be the realistic worst case scenario over the next couple months. I mean, if the sector does not get above the 200-day moving average and we see a bearish reversal, that could be the worst result of that, is for the stocks coming down and testing those December lows again. Now, the other side of that, the flip side of that, is it would be a fantastic buying opportunity. I mean, it would be right in line with what we saw in December and then December 2015, where we had massive rallies off those two lows. So the short-term negative would be, you know, we have to be careful here because we could see a bearish reversal in the complex. But if that would play out and we would get close to the December lows, that would be a fantastic buying opportunity. So I know this is a very long answer, but I mean, what I'm doing right here is I'm just being patient. I'm just waiting. I'm sitting here. You know, I have my own view, which I've mentioned here at length, and we'll see if the market is going to follow that and if I'll be right. I mean, if I'll be wrong and the market goes way above the moving averages, then I'll continue to be patient and, you know, look to see what values I can buy. But that's generally what I like to do anyway. But because I am bearish here over the next 2, 3, 4 months, I'm just sitting patiently and waiting. And if we see the market break down and make a bearish reversal, then, you know, I'm gonna be one step closer to being in buying mode. Because
Sure.
when we get the next move higher, I mean, I do think it will be massive. I don't think it's going to start the next couple months. I think probably later in the year, end of the year. But when we get that move higher, it will be massive.
Jordan, when it comes to the Trump euphoria, I think we're starting to see that peter off, and we're noticing that with the general equities And sentiment with the economy. I think a lot of frustration that's going on with the government is making a lot of people question the future. And that's very important when it comes to sentiment and the way the market trades. And you talked about interest rates falling. I wanted to get your thoughts on that. Are you saying that it's the Fed funds rate that they're probably going to lower, or is it the market interest rate that you're talking about moving forward here?
Good question. Well, just looking at like the 5-year yield or the 10-year Treasury bond yield, I mean, those yields, like I said, I wouldn't be surprised if they make a move higher over the next couple months. I mean, of course, interest rates are impossible to predict, but we do it anyway. I just think those rates could go a little bit higher before they go lower. With respect to the Fed funds rate, I mean, we could see another hike or two before I think they'd have to lower them. Looking at the overall economy, I think, and this ties in line with precious metals. I think precious metals we're not going to get that huge move higher until we see weakness in the stock market, until we possibly see a recession. If you go back in history, there's several great, which I've talked about in my book, there's several great instances where the precious metals were negatively correlated with the stock market. And they basically have been I mean, of course, they've gone up since the low in early 2016 or December 2015 for gold. But for the most part, over the last 5-6 years, they have been negatively correlated to the stock market. And so when the stock market goes into a bear market or has a serious correction, that I think is what's going to be the major catalyst for gold really moving higher and just sustaining it and for it to keep moving higher. That's what needs to happen. And so if we see that play out at some point with the economy and the stock market, that would be bullish for bonds, and you would see bond yields start to go down, and eventually the Fed would probably stop hiking rates. And but if you look at which I'm sure you follow, if you look at, I mean, the long-term interest rates, like the 10-year and the 30-year bond, they have not been going up as fast as the Fed funds rate. And so we're kind of getting to that inverted yield curve. And so that's always a major caution sign in the market. And if we get something like this playing out where, maybe the Fed hikes in June, maybe that could be their last hike, because maybe the economic data starts to worsen a little bit. And then as far as Trump, I mean, everybody's counting on this huge government spending. Well, I think we need a recession, or we need like a 20% stock market correction for that to happen. There has to be some kind of catalyst to make these lawmakers realize, okay, we need to increase government spending. They're not, I mean, I've been predicting it, other people have been predicting it before me, but there has to be, I mean, it's not just going to come right now where everything looks like it's okay. I mean, there has to be some kind of catalyst to put that in place. And, that could government spending could be the driver of the next economic cycle after the next recession. And of course, that would be very inflationary. And I mean, then you could see, of course, we're talking about 12, 18, 24 months down the road. But if that takes place, then you could see inflation going up again and interest rates going up again. But I'm just looking at here in the short term, kind of a, over the next 6 to 12 months, perhaps a temporary recession, temporary bear market in the stock market. That's very possible. And what you're talking about at the beginning, I mean, that could be an issue with the market just realizes Trump is not going to be able to push these things through right away. I mean, we might need, like I said, a recession or major stock market weakness at first before we kind of see the government spending that, people have been predicting since Trump got elected.
Sure. I'd like to get your thoughts on the U.S. dollar and the dollar index. 100 seems to be the new home, up and around 100 at least, for the U.S. dollar index. And is this number significant to you? And what are your thoughts in regards to its role and its impact on precious metals, depending on how the dollar is going to trade? And maybe your thoughts on where you think the dollar's going.
Great question. I think the dollar in the short term is going higher, which coincides with my cautious to negative view on precious metals. I mean, if you look at the dollar index, it had this move from May of last year from 92 to nearly 104 to basically 103 and a half. And if you look at the price action since December, I mean, it did a simple ABC, a three-leg correction. And so it looks like it was just correcting that strong move from 92 to 103 and a half. And also, if you look at where the dollar bottomed last week, kind of in the mid 98s, it basically bounced off a rising 200-day moving average. And remember, I said precious metals, I mean, except for silver, the entire complex has not bested its 200-day moving average yet. So the fact that the dollar has bounced above a rising 200-day moving average, and it was a strong bounce because it's already above 100 right now, and in the 200-day moving average there is in the low 98s or mid 98s. So, but on the other hand, I think precious metals right now are less correlated with the dollar than they have been. If you look at the big picture view of gold priced in foreign currencies, it's been very, very strong all around. So comparably speaking, gold has not, I mean, the highest it's gotten recently has been, I think, 1370, 1375. If you would plot gold against various foreign currencies on the same scale, it would have reached 1550, 1600, I mean, 1700, 1650. That's basically how far it's gone when you plot it against foreign currencies. So, I mean, because of that, gold has not been as correlated to the dollar, as we've expected, or at least as correlated as it has been in the past. Now, moving forward, even with that said, if the dollar rises, if the dollar rises, that's going to be negative for precious metals in some way. I'm not saying they're going to tank, but you're not going to see precious metals move higher if the dollar is moving higher here and now. But ultimately, the dollar moving too high, if it does, that would be actually a positive catalyst for precious metals. At some point, if the dollar, like, let's say, I don't know if it's going to happen, but let's say the dollar gets to 110 in the next 3 or 4 months. I mean, if it makes a really strong rise, that in itself acts as tightening, and so that would force the Fed to stop tightening, which and then you would have interest rates which would start falling. So it's kind of counterintuitive, but so I think at some point a rising dollar, if it rises too fast or too much, it would actually be bullish for precious metals. So, however, where we are right now, if the next couple points, 3, 4, 5 points that the dollar rises, that would obviously be negative for precious metals. So that's my view of the dollar. I mean, gold has been more correlated to interest rates recently, and I think that's probably going to continue. But at the same time, there is a negative correlation with the dollar. It's just not as strong as it was in the past. But the fact that the dollar has bounced off the 200-day moving average in a fairly strong way in the last 5 trading days, that's another concern for me with respect to precious metals.
Jordan, I want to get back to the infrastructure spending plan. I know you alluded to it, and specifically with silver. Now, we've seen the implications of the China boom and what that's had on industrial metals, copper, zinc. And I'm wondering if you think that, not necessarily from a monetary perspective, but from an industrial component, could this have an impact that could put silver into an ongoing bull market if they do happen to pass a big spending bill here in the U.S.?
Yes. I mean, I think it's very possible. I mean, I think silver, as we know, it tends to lag gold, and then once gold gets going, silver gets going, and then it moves a lot faster. And if we do have some kind of recession first, before the massive government spending comes in, as I said before, I mean, we need a recession or like a serious stock market correction before you're going to see that government spending happen. And if it does happen, it would definitely be inflationary, because think about it. I mean, if they're going to do $1 trillion over even just 3 or 4 years, I mean, that's 300 billion, 250 billion. I mean, that's adding, I think my math could be wrong, but I think 300 billion if we have a 15 trillion GDP. I mean, that can just add 2 percentage points to GDP. And like, if you go, after a recession, the economy is always going to get some kind of a bounce. So if we go through a recession, naturally the economy, even though we're growing much more slowly than we did in the past, if the economy would grow 2 or 3% coming out of that recession, but you add on another 2% of government spending, then it could grow possibly 4 or 5%. So growth and inflation would definitely be great for silver. And in that scenario, you would see silver outperform gold. I just think silver needs more time. I mean, we need to see this bull market really begin in earnest, and it hasn't happened yet. I mean, I think it will, but we'll have to be a little patient. I think same thing with the gold stocks with respect to silver. I think in 2018, I think that will be a much better year for silver than 2017. I mean, that doesn't mean I think silver is going to do poorly over the rest of the year. I just don't see it breaking out yet. I think it's bottom like gold, but I don't see the metals breaking out until, at best, later in the year, at worst, sometime next year.
Well, those are some interesting thoughts, and I appreciate the update. If people want to learn more about your work, Jordan, and the articles you're writing, I know they're really popular. Let them know where they would go, and also how they can get your book.
Thanks, Ken. Yeah, they can go to thedailygold.com. My book, which is more of a report, just my outlook for 2017. There's an opt-in box there at the, you'll see it. It's at the front of my homepage at thedailygold.com. And that will put you on my weekly free newsletter, which comes out every Sunday. And that's a good way to follow all the work that I put out. Interviews such as this, videos. I usually write 1 article per week, and I also post all those things on thedailygold.com, so you'll find all my free work at thedailygold.com.
Well, hey, Jordan, thanks for coming on the line with me. I appreciate your time, and I look forward to just seeing how this whole thing plays out. I'm a believer here, long-term bull. I think the opportunity over the long term is strong, but you bring up some great analysis as to why we should potentially be hesitant in the short term here. So again, thanks so much.
Thanks for having me, Ken.